Quick daily market analysis for Monday, March the 23rd. Hi guys, I'm Don, I'm a financial analyst and a trader. American markets had a broad-based rally today. That's as traders bought the dip as the American military operation in the Middle East has been paused. And we had the 10-year Treasury yield rise up to 8 months high. That's because of sort of expectations of inflation pressures coming in from that rising oil price there. Also, traders and investors are speculating that the Federal Reserve might actually raise rates to combat inflation if these oil prices stay elevated for a while. And over to European markets where stocks rebounded also. However, investors are still nervous. They're over concerns of stagflation in the Eurozone. And we had the ECB out saying that they reckon that AI could increase productivity about 4% in the Eurozone by the year 2036, so within about 10 years or so. And UK markets fell. That's on the back of weakness in the telecom sector, oil and gas, and also utility stocks. We did have a reading out on job postings there in the UK showing that job postings have increased 5%. Also, we are continuing to see strong wage growth there also. However, that data could keep the Bank of England on the sidelines there as those inflationary pressures keep rising in the UK. And lastly, over to Canadian markets where the TSX rose almost 2% in trading. That's as 9 of 11 sectors rose, with the IT sector being the strongest. We did have the Bank of Canada out saying that because of inflation, there actually could raise rates there if oil stays elevated and keeps pressuring prices there. Originally, the Bank of Canada was on the path to cut rates there, but the war in the Middle East sort of changes the dynamic at the moment for the Bank of Canada.